And nobody can fix things because we're at the end of the currency's life cycle. There is officially no purchasing power left in the currency. The only thing holding it together is the confidence of the public. So if something happens and that hopium is destroyed, then I think we're headed into that hyperinflation will become apparent to everybody, because I'm certain it's already started. Well, I'll go a little bit further than that, but I think that we're going to see a lot more inflation this year and a lot faster. So I think that there is a level of hopium that's out there right now that President Trump can fix things, and nobody can fix things because we're at the end of the currency's life cycle. There is officially no purchasing power left in the currency. The only thing holding it together is the confidence of the public. So if something happens and that hopium is destroyed, then I think we're headed into that hyperinflation will become apparent to everybody, because I'm certain it's already started. I don't think you're interpreting too much into it. I think people aren't interpreting enough into it. And it isn't just in the US. This is a global phenomenon. And the problem is that central banks want to lower the rates. So with the inflation ticking up, it's hard for them to justify that because there's only one way to fight inflation, and that's with deflation. And the way they do that is by raising the interest rates and having fewer people borrow and raising the rates and having fewer people borrow and spend, which is deflationary in a consumer-driven economy. And what they want to do is lower those rates so that they're generating more inflation. And the problem is there's so much cash that's still floating out there from all of the trillions and trillions and trillions of dollars worth of debt that has been created since 2008. It isn't that they created and that money evaporates. It goes into these fiat money or government-based money, intangible assets. And that is very, very good for physical gold and physical silver, because it means that its value, even if they suppress the spot price, which is a contract price, right? It means that is going up in terms of dollars or wherever you are, euros, it doesn't matter. So it's the best horse in the glue factory, right? The fact of the matter is they're all in the glue factory. Everything has a life cycle. And we are at the end of this current experiment, which is why you're talking about the meme stocks, you're talking about the cryptocurrencies, all of these things people are rushing to position into, but those are all intangibles. And so while there is a lot of liquidity out there, I mean, what the central banks want to do is ease into an already easy economy, and there's your hyperinflation. Right? And when that picks up, the public loses confidence. Well, look, it's really easy to determine what the true fundamental value of gold is. I am not expecting Wall Street to tell me that revaluation, it will happen 100%. I'm not even a teeny weeny bit doubtful of what that future is. What I don't know is what that would be in terms of dollars, let's say, by the time they do that revaluation. But that revaluation will be because the government is attempting to get that confidence back. So that means that inflation has really risen very visibly higher, maybe even to 50 or 100% or wherever it's going to be at that time. And so they'll lop off a whole bunch of zeros. And I can tell you, if they did it today, it would, and they did it on a one-to-one basis, that it would be north of $40,000 by the time they do it. And I know this sounds outrageous to people because they get blinded by the numbers, right? But if you went back to 1913 when somebody had a $20 1 ounce gold coin and said, one of these days that's going to be trading at $2,600 or $2,700, that person would have seemed outrageous at that time too. So it could be 3 trillion, it could be 100 trillion. I personally have a $10 trillion Zimbabwe note, so I am a trillionaire in Zimbabwe, but what does it mean? It means nothing. So if they did the overnight revaluation today on a 1-for-1 debt for gold ratio, then it would be north of 40,000. But the way that I get it is, since the gold is money, it's sound money. The dollars are based on any fiat currency right today is based on debt. So you just take however much debt they're admitting to. Now, where Andy is going could also be all the derivatives. So all of those bets on the debt. So this, when I'm talking about above 40, I'm not considering that. I'm just taking all the debt that they've admitted to and dividing it by every bit of gold that exists. In the ground, above ground, doesn't matter, right? So, yeah, we have some interesting times ahead, but let me tell you, if it gets to 42,000, 140,000, 30 trillion, whatever that number is, at that point, everybody will be quite clear that that government debt-based money has absolutely zero value. Well, but even this system is trying to make that invisible transition into the new surveillance-based currency. I am not okay with that. But if we can come together on a global basis and just get 3%, a teeny-weeny 3% of the global population to convert their government inflation-based currencies into physical gold and silver, that's everything, right? We might have a shot at having a seat on the table when they're really going into the new currency. And in that case, what I want is I want the public to take their power back. And the way that you do that is by having not just a backed currency, but a currency that is convertible into the gold. So that if you don't like what the central banks or governments are doing, you just convert that fiat money digitally or whatever, however they have it, into physical gold and create restrictions. Because that's what gold and silver do. They force you to be fiscally responsible. And so if governments can do that, and we're seeing that really, the global central banks have bought more gold now, and we don't have the final numbers for 24 yet, but even going through the third quarter of last year, they've bought more gold than they ever have historically, going back to when they started tracking it, because that's how you maintain your independence and your own personal sovereignty. And why don't we as individuals take a page from the central bank books? Because who knows more about what they're doing to the fiat money than they do? Okay, what I'm most concerned about is this massive debt wall, both government debt as well as corporate debt, as well as individual debt that is coming due. And if you can't pay it, then you roll it over, and the interest rates, because this is really why the central banks want to lower the interest rates, is because of this massive wall of debt. In the U.S., the level of new debt that they're having to issue is huge, right? I mean, it doesn't even dip down a little bit in what they're anticipating is going to happen. But that's why Fed Chair Powell wants to drop the rates, but we've been compounding interest forever, right? So that means that we're not paying any of the principal, and the interest that we haven't paid back goes into that principal, and now we're paying interest on interest on interest. So my key concern is particularly with Treasury bonds, or 10-year notes really, which is the foundation of the global system. And we don't have anybody supporting that, because there is a run on the dollar that is happening right now, very similar to what we saw in the 1960s when foreign governments were sending in their dollars and pulling the gold out of our system. So much so that it forced President Nixon to, they say, close that gold window, which doesn't sound so bad, but it really forced him to hand over, or what he did, I don't know that it forced him to hand it over, but he gave full control of inflation to these private central banks, which to me is insanity, because that's just about debt and interest, and here we are today with officially virtually no purchasing power left. So that's what has me the most concerned. And this is part of the problem, because with the economy seeming so strong, it makes it a whole lot harder for the Federal Reserve to drop those interest rates. And there's a lot of hopium. I mean, there's always a lot of hopium around a new presidency, right? And President Trump makes a lot of very bold statements, but not everything is completely up to him. So we're going to have to see how this moves forward, but that is the problem. And that is creating a lot of liquidity issues in that Treasury market, and which is the foundation of the global financial system. Well, it's Wall Street that are the bond vigilantes, right? And really, since 2008, the global central banks started using what they call forward guidance to let the banking system know what they were going to do so that they could get into a position to benefit. But then, oh my gosh, I think it was June of 2023, and when I saw them do this, I was shocked when they kept promising that they were just going to raise the rates 50 basis points, and then they surprised the markets and they increased interest rates 75 basis points, which may not seem like that big of a deal, but that started the bond vigilantes coming out again, because what it told the markets is that they could no longer trust what the central banks were saying, that the central bankers were going to do whatever they wanted to do and whatever they thought was the best thing for them to do. But the problem with that is that the markets are now disagreeing with the central banks. So much as they're trying to push the interest rates down, the bond vigilantes, the market bond traders, are pushing those interest rates up. And it was just really recently that we had the 20-year bond go above 5%. And so I anticipate seeing the 10-year bond, which is really the key bond in the world, go 5% higher than that, because the bond vigilantes are demanding to be paid more for the risk that they are taking. And that's a huge problem when you need to take on debt, because that means that you have to pay much more, create much more money to just sort of barely service that debt, at a time when you see both Japan and China that are not the big buyers that they once were, and in fact can be liquidating their bonds into this market. And especially China, we know what's going on with the BRICS, right? So I see a battle royale between global central banks, between the markets and the central banks. And now we have, a new president in the U.S. that's pretty vocal about and pretty dramatic on the things that he might attempt to do or might be able to do on his own or get backing for.